Welcome to Dinar Daily Buzz, your go-to source for updates on the Iraqi dinar, Vietnamese dong, the US dollar, and global currency trends. We deliver accurate news, expert insights, and easy-to-understand guides to help you stay ahead in the financial world. Like, subscribe, and join our community for timely updates and valuable information. Today, we are taking a closer look at the latest developments surrounding the Iraqi dinar, a currency that continues to generate curiosity and optimism as Iraq works toward a stronger financial future. Let us explore the key changes shaping Iraq's economy and what they could mean for the dinar's value. Excitement is building across Iraq as discussions around introducing smaller denominations or lower notes gain momentum. This initiative has captured the attention of government officials, banking professionals, and citizens nationwide. Many are asking why now, and what does this mean for Iraq's economy? Prime Minister Mohammed Shia al-Sudani has recently referenced an exchange rate of approximately 120 Iraqi dinars per US dollar, a notable signal of potential change. The Central Bank of Iraq, CBI, has echoed similar views, further strengthening expectations. Together, the government and the CBI appear to be coordinating a strategy aimed at strengthening the dinar, improving monetary stability, and restoring confidence in Iraq's financial system. This shift is about more than numbers. It reflects a nation taking meaningful steps toward economic self-determination. The introduction of smaller denominations represents a move toward a more practical and accessible currency system. Such a change would allow everyday transactions to function more smoothly and ensure that all citizens can participate more effectively in the economy. Beyond logistics, this step has the potential to boost public morale and foster unity, reinforcing a shared sense of progress as Iraq moves forward. Recent meetings between Iraq's Parliamentary Finance Committee and the Central Bank of Iraq highlight a shared commitment to strengthening the dinar. Reports suggest that some redemption centers are already displaying fixed rates, and many believe improvements could follow. Speculation has also grown around so-called contract rates, which are sometimes associated with major financial transitions. These discussions have fueled optimism among investors and citizens alike, suggesting a government intent on managing the currency transition smoothly and rewarding long-term confidence in the dinar. Television reports indicate a shift in Iraq's relationship with the United States from primarily military cooperation to deeper economic collaboration. This realignment aligns with broader monetary reforms, including the potential introduction of smaller denominations aimed at empowering citizens and expanding financial access. As skepticism fades, even banking professionals who once doubted the dinar's prospects are beginning to recognize its potential. This growing confidence points to a possible turning point, positioning Iraq for greater influence in the global economy. To prepare the population for upcoming changes, the CBI has released educational videos explaining the currency transition. These efforts emphasize transparency, readiness, and public trust. The timing of these campaigns suggests that significant changes may be approaching with fewer obstacles standing in the way. By equipping citizens with knowledge, the government is laying the groundwork for a smoother transition and a more inclusive financial system, one where people feel informed, confident, and involved. For months, some expected a sharp decline in the dinar's value. However, recent reports suggest a more optimistic scenario. Some analysts speculate that the dinar could eventually stabilize between 100 and 130 dinars per US dollar if Iraq re-enters global financial markets under favorable conditions. While speculative, such a move would represent a monumental step forward, signaling Iraq's readiness to operate with a stable, internationally recognized currency. Combined with the introduction of lowered denominations and the end of dollar auctions, these measures outline a clearer path toward long-term economic stability. The introduction of lower currency denominations is widely viewed as a foundational step toward creating a more functional, inclusive, and practical monetary system within Iraq. For years, everyday transactions have been burdened by the need to use large denomination notes for even minor purchases, creating inefficiencies, rounding issues, and inconvenience for both consumers and merchants. Smaller denominations would simplify pricing, allow for more accurate valuation of goods and services, and reduce reliance on informal credit or price adjustments. Beyond convenience, this shift carries deeper economic implications. It signals a move toward normalization, one where the national currency is designed to serve daily life rather than merely large-scale transactions. When citizens can comfortably use their own currency for routine needs, confidence in that currency naturally grows. This change also promotes broader financial inclusion, enabling lower-income individuals, rural populations, and small businesses to participate more fully in the formal economy. Psychologically, lower denominations reinforce the perception of value and stability, countering years of inflation-driven habits. On a societal level, the rollout of smaller notes can boost public morale by signaling progress, modernization, and responsiveness from policymakers. It conveys that economic reforms are not abstract concepts reserved for elites, but tangible improvements that affect ordinary lives. In this way, currency reform becomes a shared national experience, fostering unity and reinforcing the idea that Iraq's economic future is being rebuilt with the participation and benefit of all citizens. Recent strategic meetings between Iraq's Parliamentary Finance Committee and the Central Bank of Iraq, CBI, have been widely interpreted as meaningful indicators of coordinated intent and institutional alignment. Such discussion suggests that monetary reform is no longer fragmented or theoretical, but instead being addressed through structured dialogue and shared objectives. Reports that some redemption or exchange centers are already displaying fixed rates, whether symbolic or operational, have fueled public speculation that preparations are advancing behind the scenes. While official confirmation remains limited, these signals contribute to a broader narrative of readiness and planning. Additionally, ongoing conversations about so-called contract rates often referenced during major financial transitions have captured public imagination. Though these rates are not formally recognized in mainstream monetary policy, they represent hope for a managed transition that acknowledges long-term participation and confidence in the dinar. For many investors and citizens, these discussions imply that authorities are mindful of stability, fairness, and gradual implementation rather than abrupt disruption. The mere fact that such topics are being openly discussed reflects a shift toward transparency and engagement. Optimism grows when people perceive that leaders are proactively managing expectations, mitigating risk, and coordinating across institutions. Even if some elements remain speculative, the convergence of political oversight and central banking strategy suggests a deliberate effort to guide the currency through a critical phase with minimal shock and maximum public confidence. Reports highlighting a shift in Iraq's relationship with the United States from one centered primarily on military cooperation to one emphasizing economic collaboration mark a potentially transformative moment. Such a realignment reflects Iraq's evolving priorities as it seeks long-term stability through development, trade, and financial integration rather than security dependence alone. Deeper economic ties can facilitate investment, technical assistance, and institutional reform, all of which are essential for a modern monetary system. This transition aligns closely with broader currency reforms, including discussions around lower denominations, banking modernization, and reduced reliance on the US dollar in domestic transactions. As Iraq positions itself as a more economically sovereign state, confidence in its national currency becomes a strategic necessity. Notably, sentiment appears to be shifting even among traditionally cautious banking professionals. Individuals who once doubted the dinar's prospects are increasingly acknowledging structural improvements, regulatory reforms, and international engagement as meaningful progress. This change in perception matters because confidence, both domestic and international, is a cornerstone of currency strength. When global partners view Iraq as an emerging economic collaborator rather than a fragile security case, the dinar benefits indirectly through credibility. Such recognition can open doors to broader participation in global markets, enhance foreign direct investment, and reinforce the narrative that Iraq is moving toward a more balanced, influential role in the international economic system. The Central Bank of Iraq's recent release of educational videos explaining potential currency changes represents a strategic and often underappreciated component of monetary reform, public preparedness. Currency transitions, whether involving redomination, new notes, or structural changes, can generate confusion and anxiety if not clearly communicated. By proactively educating citizens, the CBI demonstrates an understanding that trust is built through transparency and clarity rather than secrecy. These educational efforts help demystify technical concepts, address common misconceptions, and reduce the risk of misinformation spreading through informal channels. Importantly, they empower citizens to feel involved rather than blindsided. When people understand the why and how behind reforms, they are more likely to respond calmly and rationally. The timing of these campaigns has also drawn attention. As such, outreach is typically associated with later stage preparations rather than early speculation. This has led many observers to conclude that fewer obstacles remain than in previous years. Beyond logistics, education fosters psychological readiness, ensuring that citizens see change as an opportunity rather than a threat. It also strengthens institutional credibility, signaling that authorities are accountable to the public. By investing in awareness and understanding, the government lays a foundation for smoother implementation, reduced resistance, and a more inclusive financial environment where people feel informed, confident, and respected as stakeholders in the nation's economic future. Speculation surrounding a potential new exchange rate for the Iraqi dinar has intensified as broader reform narratives gain traction. For months, pessimistic forecasts dominated discussions, with some expecting depreciation or prolonged stagnation. However, recent reports and commentary suggest a more optimistic outlook rooted in structural reforms, improved fiscal discipline, and potential reintegration into global financial systems. Some analysts speculate that under favorable conditions, the dinar could eventually stabilize within a range of 100 to 130 dinars per US dollar. While such projections remain speculative and should be approached cautiously, they reflect growing confidence in Iraq's economic trajectory rather than mere wishful thinking. Achieving such a rate would require coordinated policy execution, robust foreign reserves, and sustained political stability. Yet, even the discussion of these possibilities marks a shift in tone from survival to potential growth. A credible, stable exchange rate would signal Iraq's readiness to operate as a predictable participant in international trade and finance. When combined with measures such as introducing lower denominations, reducing dollar auctions, and strengthening domestic banking, a clearer path toward long-term stability emerges. Rather than a sudden windfall, this vision emphasizes gradual normalization and credibility. If realized, it would represent not just a monetary adjustment, but a symbolic milestone in Iraq's re-entry into the global economic community. Economic growth in Iraq continues to unfold against a backdrop of real and persistent challenges, particularly those tied to oil production limits and global energy market fluctuations. In this environment, a stronger Iraqi dinar could play a critical stabilizing role by helping to offset revenue shortfalls caused by reduced oil output. When a national currency gains strength, it can enhance purchasing power, lower the cost of imports, and provide the government with greater flexibility in managing public finances. This in turn can translate into broader economic benefits, including increased investment in infrastructure, public services, and private sector development. A more stable and valuable dinar may also encourage job creation by making domestic businesses more competitive and reducing uncertainty for employers. For ordinary citizens, currency strength is closely tied to quality of life, as it affects everything from food prices to housing costs and access to essential goods. Rising confidence in the dinar can improve consumer sentiment, encouraging spending and participation in the formal economy. From an investor perspective, this period represents a unique opportunity to observe and potentially engage in Iraq's gradual economic resurgence. Long-term investors often look for moments when structural reforms align with improving fundamentals, and Iraq appears to be approaching such a phase. For citizens beyond economics, a stronger dinar symbolizes hope for stability, sustainable growth, and a future defined less by crisis management and more by opportunity and progress. The decision to end Iraq's reliance on dollar auctions marks one of the most significant and symbolic financial reforms in recent history by planning to permanently close this platform by the end of 2025. Iraqi authorities are signaling a decisive shift away from mechanisms that once served as emergency tools toward a more normalized and sovereign monetary framework. Dollar auctions were long used to stabilize the currency and facilitate access to foreign exchange, but they also created vulnerabilities, including excessive dependence on the US dollar and exposure to external pressures. Phasing out this system reduces those risks and grants Iraq greater autonomy over its monetary policy. More importantly, it reflects growing confidence in the country's ability to manage currency flows through regulated banking channels rather than extraordinary interventions. This move is not merely technical, it carries deep symbolic weight. It communicates independence, maturity, and readiness to operate under standard global financial norms. Ending dollar auctions also encourages the use of the dinar in domestic transactions, reinforcing its role as a true national currency. Over time, this can strengthen public trust and reduce dollarization within the economy. While the transition requires careful management to avoid volatility, it represents a bold step toward a self-sustaining economic model, one in which Iraq sets its own financial course rather than reacting to external constraints. As part of its broader reform agenda, Iraq is undertaking a comprehensive modernization of its banking and financial systems to align with international standards and best practices. One of the most notable changes involves how foreign transfers are processed. Rather than relying on indirect or external mechanisms, Iraqi banks are increasingly handling international transactions directly through established correspondent banking relationships. This shift improves transparency, efficiency, and security while also reducing delays and compliance risks. Aligning with global standards is essential for building credibility, particularly in an era where financial integrity, anti-money laundering measures, and regulatory compliance are closely scrutinized. These reforms have received support and recognition from international institutions, reinforcing the perception that Iraq is serious about integration into the global financial system. Modern banking infrastructure not only benefits large corporations and investors, but also enhances services for small businesses and individual customers by expanding access to global markets. For foreign investors, standardized systems reduce uncertainty and operational risk, making Iraq a more attractive destination for capital. For the country as a whole, this modernization represents a long overdue upgrade that strengthens institutional capacity and resilience. By meeting international norms, Iraq is not just improving efficiency, it is signaling that it is prepared to act as a reliable, transparent, and credible partner in the global economy. The Iraqi dinar now stands at the center of a series of interconnected reforms that together suggest a nation actively redefining its economic future. Measures such as introducing lower denominations, modernizing banking systems, and ending dollar auctions are not isolated actions. They form a coherent strategy aimed at restoring confidence, functionality, and sovereignty to Iraq's financial landscape. These changes signal momentum, a sense that Iraq is no longer merely managing crisis, but deliberately building long-term stability. While challenges undeniably remain, including political complexity and external economic pressures, optimism surrounding the dinar is stronger than it has been in many years. This optimism is grounded not only in expectations of currency performance, but in visible institutional progress and policy direction. Iraq's resilience, forged through decades of hardship, has created a population accustomed to adaptation and perseverance. That resilience now supports reform rather than survival alone. Each step forward reinforces the idea that meaningful progress is possible even after prolonged periods of uncertainty. As confidence gradually returns, Iraq is reclaiming its narrative, moving from recovery to renewal. The journey is ongoing and outcomes are not guaranteed, but the trajectory suggests a nation rising with purpose. As observers, investors, and citizens alike watch these developments unfold, Iraq's story increasingly reflects ambition, reform, and the pursuit of a stable, prosperous future on the global stage. A stronger dinar could help offset losses from oil production cuts, providing Iraq with a much-needed financial buffer. Increased currency value may also support job creation, improve living standards, and build a more resilient economy. For investors, this moment represents an opportunity to witness and potentially participate in Iraq's economic resurgence. For citizens, it symbolizes hope for stability, growth, and a better quality of life. In a bold and symbolic move, Iraq is ending its reliance on dollar auctions. By the end of 2025, this platform is expected to close permanently, marking a major milestone in financial reform. This step reduces dependence on the US dollar and gives Iraq greater control over its monetary policy. More than a technical change, this decision represents independence and confidence, key ingredients for building a self-sustaining economy. Iraq is also modernizing its banking system to align with international best practices. Foreign transfers will increasingly be handled directly through Iraqi banks and their international correspondent networks, improving efficiency and security. This modernization has received global support and represents a significant upgrade to Iraq's financial infrastructure. By meeting international standards, Iraq is strengthening its appeal to foreign investors and reinforcing its role as a credible global partner. The Iraqi dinar sits at the center of sweeping reforms that could redefine Iraq's economic future. From introducing lower denominations to ending dollar auctions, these changes signal a nation on the rise. While challenges remain, optimism surrounding the dinar is stronger than it has been in years. Iraq's resilience and determination demonstrate that progress is possible even after long periods of hardship. With each step forward, Iraq is not only rebuilding its economy, it is reclaiming its place on the global stage. Stay tuned for more updates as Iraq continues this remarkable journey toward economic stability and growth. Thank you for joining us, and until next time, stay safe, take care and have a prosperous new year. Disclaimer: the information presented is for general informational and educational purposes only and should not be construed as financial, investment, legal or economic advice. Any discussion of currency values, exchange rates, economic reforms, or potential outcomes, whether stated as analysis, opinion, or speculation, reflects interpretations based on publicly available information, and does not guarantee future performance or results. Currency markets and national economies are subject to political, regulatory, and global factors that can change rapidly and unpredictably. Readers are encouraged to conduct their own independent research and consult with qualified financial, legal, or economic professionals before making any investment or financial decisions. The author and publisher assume no responsibility or liability for any actions taken based on the content provided. Past trends, commentary or projections are not indicative of future outcomes, and all decisions remain the sole responsibility of the reader.